Hello everyone, welcome to this week's Tactical Watch List. We have an exciting week ahead as I found 27 setups in my weekend screening coinciding with the news today that Trump struck a trade deal with China, which should give the market a healthy boost. A lot of stocks are likely to gap up on this hype, but we got to stay disciplined and not chase them because if this deal falls through, your stops are going to be much wider since you chase it up so high. This deal isn't written in stone yet either. Much like how Zelensky agreed to the minerals deal and then he backed out once he got to the White House, it can fall through. So while it is exciting news, you have to remain unemotional and disciplined. So if your stock is gapping up more than 2% over the pivot, you got to let it go without you. It's the name of the game. You can't get them all. At the very least, use a mathematical stop, or if it's, gapped up way too high, maybe low a day, treat it as like an EP type of play. But either way, you don't want to widen your margin of error on this news. So with that said, let's get into it, starting in order of highest relative strength. First up, we have ETON, pharmaceutical company. It is kind of just wedging up here on the right side, not much consolidation in the handle. So ideally, I'd like to see maybe a shakeout and a couple days inside before it goes. But like I said, a lot of these stocks are probably going to gap up tomorrow morning. So I'm not holding my hat on this shakeout here. Next up, JUNE, Specialized Consumer Services. It's a shorter base here. It's only about 6 weeks or so. But the volume dry up over here looks really good. Dried up pretty nice back here, but never broke out. So, but it is a little bit too wide here. So if you take this pivot down to here, it's at 11.5%. So we need to see it get up back to this level and then tighten up. Anything 8% or less would be viable. Next up is PLTR. This one, if you had this entry here, and if you missed that, it corrected on earnings. And now we just need to see this build out a handle here along these highs. This left peak. This reminds me of the PEN trade that I took on Friday, where it got up to the left side peak pretty quick, and usually that's where it stalls out. And just like PLTR, it got to that left side peak, and then boom, earnings hit, and it stalls out. So we want to see this rebuild that pivot here. Might not be ready to go this week, and it might just blast off tomorrow. But if it does just go tomorrow, I wouldn't take that trade. Even though it's a name I really want to be on, you got to think risk first. So let's hope it doesn't. ESLT, this one broke out, poked its head out on Thursday, then went inside on Friday. Really low volume inside day on Friday, which is good news here. So you can still buy this. This is an aerospace and defense name. Somewhat of a short base, about 6-7 weeks. But this one is still buyable. You could even wait for it to recover over Thursday's highs and buy it there. Because, from the pivot down to this level here is only 6.7%. So, buying that reversal recovery only gives you 8%. So that's still buyable. It's still low risk there. GEV, this is a alternative energy. I believe it's nuclear. And there's no real pivot yet here on this right side. It's trying to form it. This is what I'm looking at as the pivot here. Whoops. So it's just not clearly defined. So, if this one just goes, you can maybe buy it over Thursday's high. I don't know what type of stop that'll give you. I'll give you almost 7%. If you really, really love this name and it just goes tomorrow, let's say it gaps up and does something like that, you can, I guess, it's sloppy. It's not something I would do. But like I said before, if you really, really love the name, it's a creative way to get on. Next up, we have Spotify. This one is another one where I would ideally like to see a shakeout and then a couple days inside before it goes. But really nice big base here, about 13 weeks. You got your 4 contractions, 1, 2, 3, 4. Pretty tight here, about a 5% stop if you're using the low of May 5th. It's got a clean structure, pretty low risk. And if you look at the previous trades, here, let me back out of here. From this first base, I bought this on October 29th, and it ran up 25%. Then off of this base, it ran up 30%. So ideally, you can expect a 30% move out of this base or more, because it's a longer base, a deeper base, more well defined than the previous one. So this one has some serious potential. Next, we have SRAD. This is casinos and gaming. Looks a little sloppy here on the right side, but down to this pivot low is about 7.25%. I'd like to see it get tighter, but it might just go. I've been watching this one for a while. Thought it was gonna get tight over here, but then it just kind of got a little volatile. Then it sort of quieting down here, so let's see if that can get tighter. LLYVA. I've been watching this one for a while too, and these 3 inside days here, well, 2 inside days, really caught my eye. Really low volume, drying up here. Minimal overhead supply way back here, back in February. So this one looks really good. I'm really interested in it. It's movies and entertainment, so that falls into the leisure category, leisure entertainment, which is one of the biggest winning groups in market history. So got my eye on that. MRT, passenger ground transportation. This one is a bigger base here. Let's go back to the 6 month. Big base back to November, and your stop here is about 8%. It's viable. Of course, I'd like to see it get tighter, but you do have these reversals here. So this might, if this does break out, I'd imagine it to stall somewhere around here. This is also low price. This is not normal for me to have a $3 stock here, but I am widening my parameters so that people with smaller accounts who do trade these low price stocks can benefit from my analysis here. So $3 stock. I mean, considering it's a $3 stock and it's got an 8% pivot, that's pretty good. It is thinner, about 50,000 shares per day. But again, if you have a small account, if you got you're trading 30 grand, you can trade something like this. You don't have to. I see on Reddit all the time, all these people say, "Oh, that stock is too thin," but then they have like a $10,000 account. Like, bro, you don't need a stock that trades 5 million shares a day. You're so infinitely small that you can trade a stock like this. But they look at the intraday chart and it looks like Morse code. I mean, look at this. It's Morse code here. So that scares a lot of people. They don't want to buy it. They don't trade off the daily. So if you do have a small account and you want to trade these thinner names, just don't look at the intraday because it's going to scare you. Moving on, QFIN. This is a consumer finance. Got a decent pivot here, about 6%. Little bit of overhead supply to the left. I'd prefer if this was back here, but this one is still a decent sized base, probably, I don't know, 12 weeks or so if I had to guess. RBLX, Roblox. This one is kind of like the GEV, where the right side is just not defined yet. We don't really have a pivot yet, but this is what I'm looking at for the pivot. So if it can get tighter, get more defined, maybe define a level. I mean, even if it just goes sideways here for a couple days, that would look a little bit better. At least you have some confluence in these areas to define a pivot. But right now, it's not really there. But still, definitely a name I want to get on and taking a close eye on it. CRS. This is steel, so not something I normally trade, but I love the big base here, and I love this tight pivot here. It's about 5.5%. Nice structure here. I love the stair stepping up. That looks good. And yeah, it's high relative strength. DRS. This one already broke out here on earnings, but now it's just forming another. This is basically a natural reaction. Like most of the time, it'll pull back and then go up, but sometimes it just kind of pulls back and then goes sideways. So it's a more aggressive play, but it's definitely. I mean, this pivot alone is, whoops, sorry. It's only about 4, it's under 5%, so it's definitely playable. GRDN, this is that recent IPO I put out on Twitter a while back. Nice big base here. Broke out last week on Wednesday, but then just came right back inside. So this one's still buyable. I mean, you can wait for the recovery, may even recover over Thursday's high to get back in. But yeah, it's still pretty tight. Down to here is about 6%. So this one is still a viable option, and that's a drug retail stock. IDCC application software, decent size base, probably 10, 11, 12 weeks, which is ideal. And then the pivot here, under 5% here. So you could even put your stop below the 50-day, which is this red line here. Just for if it wants to retest, shake out, and then come back. But this one looks really good. OSIS electronic equipment was forming a pivot here, but then just gapped up and now just consolidating. Nice clear pivot. You're looking at about a 5.5% stop there. PEN, this was the one I talked about on Twitter. I took this for a day trade. It ran up to the left side peak very quickly, so I just sold the whole position, took it as a day trade, and now I like to see it form another pivot along these highs. So it's likely gonna, come back up, do something like this. Sorry for the unstraight lines. It's hard to draw. This is why I draw most of everything, but I didn't for this one. But yeah, just make another pivot here and then break out of these highs. So that's if it just recovers and goes without me, then I don't care. It's I took a day trade. I got some money out of it, and there's plenty of other names to buy. Never have fear of missing out over here. SKWD. This is an insurance name, not the greatest. Tried to break out here back in April, and then retest, and then did the old. He faked you out, stopped you out here on the 25th, and then blasted back off. But now it's just building another pivot here, similar to the DRS setup, but just not as extended. So this one, you got about a 4.25% stop here. That looks good. SENEA, packaged foods and meats, decent sized base here, about 9, 10, 11 weeks. Looks like it's pulling back here, and you're still under 4.5%, 4.25%. So this one can just go. T, which is AT&T. This one actually broke out here on the 6th, and then just came right back in. So it's still viable where it is. This might need more time. Maybe gets support off that 20-day and then goes from there and recovers. With this new this market news. CYBR, this is the cybersecurity software I mentioned a few times. Really nice pivot here. You're looking at about 4.75%, 5% stop here. Minimal overhead. I like this one just as much as I like FFIV. FFIV actually tried to break out on Thursday, came back inside on Friday. So this one's still viable. Maybe you just take this entire pivot and move it up here. That way you're clearing some of this supply as well. This might go inside for a couple days here before it goes again. So we'll see how that one works out. We skipped a couple here. TXNM. This is another one where you can, you look at this overhead supply on the left, and it's reversal, a reversal, reversal, reversal. So even though there's a clear pivot right here, you even have some reversals directly to the left. So you could just take this whole pivot, move it up here, and now you only have a little bit right here, 1 day, 2 days. That's clearing a lot of supply. And you're likely going to have this one work than if you were to have bought it down here. So, and it's not that much of a change, right? So let's say you buy this this pivot here down to Friday's low. is only 4.3%. So if you just wait for all that supply to clear and use that same stop, you're at 5.5%. That's still amazing. And your odds improve significantly. So I would wait for it up here. And this might even, run up to that level where all that selling occurs and then just continue to build out. So Checkpoint is another cybersecurity name, another decent sized base, around 10 weeks. And you have this pivot here that's about under just about 4%. So this one I don't love. I mean, I'd prefer the other software as a company, but as a chart setup, this one looks pretty good. FFIV we went over. LQDA, a decent base here. You had a somewhat of a pivot, not something I would buy. I wasn't even looking at this. I saw it, but I didn't put it on my list. I didn't really love it, but it did break out here. Now just pulling back. Almost got to that left side peak here where it usually stalls out. So this is viable as a pullback buy. I just want to see it have a good close first. That's all. So it does something like this, then the next day, if it breaks over that high, that's your entry point. So looking for a pullback buy on this one. LQDA. It's a pharmaceutical. WMB. Now this is oil and gas transportation. Don't normally trade oil and gas, but this base is pretty big, going all the way back to November. And it looks a little wide, but this pivot low down to here is only 5.5%-ish. Minimal overhead supply, tight pivot. This one looks good, big base. So found support off the 200-day here on these shakeouts. So this one's viable. And last but not least, we have SO. This is electric utilities. This base is big enough here by itself, but if you zoom out even further, I mean, it's just a massive base here, right? So big base, tight pivot. You're looking at, I mean, if you take it all the way to the low here, it's only 3.4%. That's well below the 50-day. So this one is super tight. Again, electric utilities, not one of the best groups, but if you want to take it for a quick trade, that's all you can do. So that's it. That's all 27 names, and hope most of these don't gap up and provide us an opportunity to actually buy them without chasing. But we'll see how the week goes, and I'll shoot out some more ideas throughout the week as I see them. Take care.